Good morning, everyone, and welcome to the show this morning. Welcome to what is, in fact, I suppose you could call it Taco Thursday. We're looking at what's happening in markets this morning, mere hours after the Greenland crisis appeared to have been resolved. I'm joined by Axel. Good morning, Axel.
Good morning, Chris. Yes, indeed, it has been resolved until the next outburst.
Don't spoil it for everybody.
Yeah,
so last night we had, and good morning everybody on the chat. Thank you for joining us. Don't forget, we've got Axel with us this morning. So if you have got any chart requests, don't forget to put those in the chat as well, because we could do with some suggestions to work through. It is Taco Wednesday, Taco Thursday. Did we expect this?
you did. I wasn't so sure.
I didn't say, that's not a set-up question, though, but it sounds like it.
Yeah, no. I mean, you were right. Once again, Trump just did what he always does, threatens everything and then actually backs off. So as far as I can understand it, the agreement that they've seemed to come to yesterday is that he would get small pockets in Greenland to be able to build bases there and thereby defend Greenland. Even though if you look at Greenland, I mean, there haven't been any sightings of Chinese or Russian warships around.
No, magical Chinese warships.
Exactly. So, yes, I mean, it's interesting because only, a decade ago, the US shut down lots of bases in Greenland?
Yeah, the last one went under Trump 1, or the one before. There's only one left on the space base, yeah. So I think it's odd that we are focusing so much on this.
Yes. But what was interesting at Davos, I found, is that the Europeans, for the first time, at least some nations seem to say, well, actually, this is too much. We might actually have to also impose tariffs or threaten to do so on the US. And I believe that's a new thing. Now, obviously, the European Union hasn't agreed on that. It didn't need to in the end. But it'll be interesting how they will react next time around, because I'm sure there's going to be a next time. And if you look at the markets, I mean, obviously they're back up again. The risk is off. Yields are coming off again. That was the worry with regards to the Japanese bond auction, the 20-year auction, which didn't go so well earlier this week. And we saw a yield spike in Japan to levels last seen in, all-time highs in the 40 and 30 years, and I think the 10 years into the 1990s. And even the US 10-year yield spiked up to levels last seen in August. But that's all calmed down now, which is good.
Yeah, I mean, it's interesting saying, I think you can hear me now. I think my mic's working now. The gallery can chat in my ear. If not, and we'll find another one. It's a Rutte-Trump agreement, because he is now the man that is very good at talking to Trump, apparently, saying the right things. But the problem is he doesn't speak for Denmark.
Exactly.
So the worry this morning, you've got the Danish Prime Minister this morning is saying that there's no suggestion of any extra sovereign bases in Greenland for the US. So it's the risk that this has yet to actually be signed. And like all these trade deals, we had trade deals in inverted commas last year. They're not actually trade deals. They're merely pieces of paper that he's agreed individually, and therefore can be easily set aside very, very quickly, I suppose. Which is the problem for markets, assuming, as we got last night, the Dow up 500 points or whatever it was, that it's all fixed. I think that's where we are now, isn't it, really?
Yes, I mean, if you look at the Dow, as you can see here, bullish engulfing patterns looking very, very positive on the charts. And basically, yes, as long as we stay above the lows we saw this week, we are still in very clear uptrends, even on the shorter term timeframes. What is interesting, though, is if you look at gold has come off about $100 because, it went up because of safe haven flows into gold. But if you look at silver prices, silver actually didn't really care that much. It came off a bit, and it's heading back up again towards $100 per troy ounce. So
yeah, it's recovering after yesterday's little bit of a shakeout. But,
yes.
But as you say, uptrends all over the place, and no sign of them breaking.
No. Even dollar yen is continuing to go up. And if you look at that one, I mean, we are close to the psychological 160 yen zone, where usually, in the past at least, the Bank of Japan has threatened or has actually intervened. And nothing is stopping it. So the dollar is actually rising once again, having come off a little, I think, over the last couple of days.
Yeah, and it's surprising. Well, not surprising, but the remarkable thing is how little volatility, not how little volatility we had, but how quickly it's all given up. Volatility rallied to a 2-month high, but it's even nowhere near where it was in November. And yet, does it still suggest that people are still waiting for that next big sell-off? Because as we've discussed probably endlessly, we haven't had one in months. We haven't had a 10% drop since April. Therefore, people are kind of very jittery. They're just expecting everything. This is the next big one. Look, volatility spiked this week from multi-month lows. The S&P has stumbled, and then nothing happens.
Yeah.
Is the market's going to continue to fox everybody, if you like, in the same way that they did throughout the last 8 months of 2025?
It may well be the case. Having said that, though, I mean, we've seen 3 years of double-digit gains in US equity markets, and it's quite rare to see a fourth year in a row. And we haven't seen a 10% correction. Even in November, we didn't.
It was five or six at most, wasn't it?
And everybody got really, really worried in November and thought that was the top of the market. So I think the top might happen when everybody's actually very, very bullish and doesn't expect anything, and then something comes out of the blue and it goes wrong, and then suddenly you get a sharp sell-off. But yes, as long as people expect a top to happen, it's probably not going to happen.
It doesn't feel like everyone is bullish, though, does it, at the moment?
No, but last year, at the end of last year, a lot of people were also taking money off the table. Now, maybe they got their timing slightly wrong, and they might still be right, and we could see this year a sort of bear market. But what's more likely is that if you look at midterm election years in the US, this year tends to be a weaker year anyway.
Yeah.
So maybe we'll just see a lot of sort of up and down.
Find that while you talk, because the idea of the 4-year presidential cycle is the one to look at, isn't it? The idea that years 1, 3, and 4 are quite good, but the election year itself, I'm trying to find a chart that shows it to us now. Because of course the last midterm year was 2022, and that was a very volatile period, wasn't it?
Yes. I mean, at the moment, we're not seeing the volatility.
No.
But, I mean, basically, as a chartist, it's easier, I guess, than a fundamental analyst, because you will see if the markets turn. Because usually what happens is at tops, you've got two sort of kinds of tops. Either you've got a lot of very sharp upside momentum, like you're seeing in gold and silver at the moment, and the sort of this exponential rise then basically gets to a point where suddenly you've got the same in reverse. So you get a sort of spike top, or you get one where you get a lot of volatility and a sort of going up, failing, going up again, failing, but the bars and the candles become much, much longer, a lot of volatility at the top, and then it tops out. Obviously, you see that only in the with hindsight. Or you can have a sort of a rounding top, but that's more rare, where the market sort of just runs out of steam. Right now, we're not seeing any of those. I mean, if you look at even the Nasdaq, which is underperforming, and which, by the way, this week went into negative territory on the year, just for a couple of days.
Give it a chance. It's only mid-January.
Yeah, but if you looked at the other markets, I mean, they've done extremely well in the first 2 weeks of the year.
And small caps especially, we should come to them in a second.
Yeah, but basically here, if you look at the Nasdaq, it's still in an uptrend. We make a series of higher highs and higher lows, and yes, we've got sort of a resistance area just below the 26,000 mark there, but the trend's your friend. It's still pointing higher, so don't fight it necessarily until you really get a clear sign it's no longer an uptrend.
Do you think people sort of misinterpret seeing those 3 resistance levels and then read into it what they want to see, which is the momentum has stopped, is now firmly shifted? Because people will look at that, and some people might say triple top, because triple top is one of the things that sounds exciting, because if you've had 3 attempts to break through something, it therefore follows that the next one, if it fails again, or it must lead to a weakening of momentum. Do we think people are getting overexcited looking at the recent performance? And as you say, it is notable that tech has underperformed broader US indices, which is a marked change from the last 2 years. But then, sorry, this is to talk about over my question, but people have been saying for 2 years, oh, it's just tech, it's not a real market, and then suddenly once tech starts to underperform, then people say, well, now the market's going to go down because tech isn't doing very well. Is it kind of people sort of revealing their bias, if you like, in the way that they're talking about markets?
That's the way I see it, yes, because it's very healthy for a market to rotate and also to see more breadth. Now we're seeing far more stocks than just a few tech stocks pushing this market higher. It's basically all of the S&P, and that is healthy. That is good for a stock market. So with regards to your question, saying, are these tops here on the Nasdaq, is that a top? Well, it will be a top if and this is the big if we were to fall through the November lows, unless that is the case, what this is more likely to be is just a sort of perhaps even an ascending triangle. So if we were to break above 26,000, we're likely going to head towards new record highs again. So for me, as long as you've got a series of higher highs, and not necessarily higher highs, but more importantly, higher lows, it's still an uptrend.
Yeah, exactly. That there's still people willing to buy at those low levels and willing to sort of move into markets. And talking about breadth, I don't know whether we can see my screen. This is a chart that, we'll just get rid of that other advert there, of course. There we go. This is the one I look at quite frequently from stock charts. If you look at, this is what's called the New York Advanced Decline Line. So the measure of stocks going up and subtract the number of stocks going down, and then you get a number. And then if you turn it into what's called a cumulative chart, where it adds up every day, you get a chart that looks something like this. And so it's simpler the measure of, this is everything on the New York Stock Exchange. So it's not weighted for market cap, which you might argue maybe not limits its usefulness, but it perhaps doesn't understates the importance of the heavyweight stocks. But nonetheless, this is all the stocks. And as you can see, we hit a new record high in this just last week. I think it was on the 12th. And we had a little bit of a dip over the last couple of days, and it started to move higher once. So this is in an uptrend as well. And it's a bit like using an indicator. The price of the thing you're trading is the most important thing. But if breadth is still continuing to go higher and higher and higher, then that is an indication that the market is likely supported, isn't it?
It is, until you have something changing, and then suddenly you see that breadth coming off with the market. But yes, I mean, we are still in uptrends, and we've been asked by our viewers whether we're looking at a short-term time frame, just a few days or weeks or month or year. You don't know. You will see a top with hindsight, but in the short term, it's certainly looking bullish. As I say, in the medium term, for me, as long as we stay above the November lows, it's still an uptrend on the medium-term trend, and long term as well. So don't fight the trend, because we've seen some people do that, a year ago on the Nasdaq, for example, and they got badly burned. So it's much easier to just trade in the direction of the trend than to trend against it. And also, I mean, if you look at gold and silver, everybody wants to go long there now, or platinum and other precious metals. You can do so because we're trading at all-time highs, but obviously you need to be aware that at some stage the ascent of this up move might actually slow down, and you could see a higher volatility. So the risk is getting bigger as the trends continue, especially if they are exponential. Having said that, quite often they last longer than we think. So it's not a bubble. When people think it's a bubble much, much later. So it's difficult to talk about timeframes.
It is. And if you're looking at gold, it had a new record high yesterday. Obviously, it came off on the Greenland news, but moving higher once again this morning. We had news this week. The Polish central bank wants to buy another 150 tons of gold, which I think would make it the largest holder of gold, certainly in Europe, if not globally. I need to check on that, but certainly one of the largest. So there's your fundamental driver behind this. And this shows no sign of slowing down, does it really? No,
and you've had China buying loads and loads of gold, and a lot of countries are doing so because they also might want to move slightly away from the US dollar.
Because of this week and the sense, even if the Greenland crisis goes away, you're still left with that aftertaste that says the US is now an unpredictable actor in global affairs, and therefore people are concerned about what goes from there. And how you can't rely on the dollar. And that's a major problem for the US as well. If the dollar isn't treated as the stable, what's the word I'm looking for? Not reserve currency, but if it becomes viewed as an unstable asset, that's a bad thing for US borrowing costs, which we know are a major struggle anyway.
Yes, I fully agree with that view. And yes, I mean, the problem is that if you look at the buying that you see in gold because of these geopolitical worries to do with the US dollar, then it's very likely that these precious metals will continue to go up. The question is, will they continue to go up at the same pace as they have over the last year or so? Because if you look at silver, I mean, it's crazy, the rise we saw in the last year alone. Can't even remember now. Is it 90% or something like that?
In that kind of ballpark, yes. We were looking at this yesterday. So there's your silver, which again is that I forget who said it. But parabolic markets go on longer than you think, but they don't correct by going sideways.
Exactly. Yeah.
Which is the kind of clever thing you say when you see a market's gone up a lot and if you're not in it particularly. You sort of console yourself by saying, well, at some point it's going to be ugly. And with silver, it may well be, because it has history of this. 2011, it was ugly. It was 2011, wasn't it, I think? And then obviously further back in the dim and distant past, we're looking at the 80s when the Hunt brothers tried to corner the market. That was brutal. So when it does happen, it is likely to be dramatic for silver, and certainly it looks overstretched simply by looking at a chart, simply by eyeballing the chart, the distance here between the price and the 50-day. It doesn't mean, again, like everything, it doesn't mean anything until it does, but it's simply perhaps a warning to suggest, because you can see that the gap's been widening and widening and widening. Obviously, moving averages are lagging, but you see this in markets so often that they rally, and then eventually the gap is, the distance, if you like, is closed, isn't it? Through either the moving average catching up, or more likely in this case, the price coming down. But
Yes.
it gets futile to say when that will happen.
Yes, but what you need to be prepared for it. So basically, I mean, we saw that in December. I think we had a one-day drop of 11% in the silver price. So if you wanted to go long now from a longer-term perspective, perhaps have a 20-25% stop loss on there. But somewhere you need to have a guaranteed stop loss, because when it does turn, as you say, because it's an exponential advance, it's very likely to come down just as quickly. And when that happens, there will be a lot of triggers of stops being triggered everywhere. And you could even have, flash crashes and things like that happening. So you just need to protect your downside in case things turn.
Markets falling 3 times faster than they rise is the old saw. We should talk gold record highs, silver near record highs, indices not far off record highs, Bitcoin.
So Bitcoin is interesting because Bitcoin didn't behave like gold. And last year, everybody thought, oh, Bitcoin is the new gold. And when there is a worry in the geopolitical space, then just buy cryptocurrencies and the big ones will do very well. Well, yes, Bitcoin went up to $126,000, but then it went down to $80,000 last year. And the interesting thing is in the last few weeks, Bitcoin basically also declined. And we saw that yesterday. We came off quite sharply.
Sorry, we flipped to Axel's chart, sorry.
And we can see here that we had a sharp decline from around $96,000 all the way down towards 87 or so. So we're holding at this previous support here. The question is, can we actually bounce back and rally above that, 96 or even the psychological $100,000 mark? In that case, yes, we could form a bottom here. But if you look at the Bitcoin price movement over the last, 2.5 months now, it's actually not done really well, has it?
No, it's been dire, particularly. It's been probably the longest stretch of poor performance, well, certainly since the early part of 2025. Is it simply because it seems so odd to see Bitcoin struggle when everything else seems to be doing so well? It's years and years of a long-term, and still is a long-term rally for Bitcoin. But when you have a market where everything else seems to be going up, even oil prices have started to recover, and yet cryptocurrencies, particularly obviously Bitcoin gets the most attention, Ether's not doing great either, that they just don't seem to have this ability to recover. Because they were supposed to be a risk asset now, in the same way, because they've been institutionalized, the ETFs, the trackers, and institutional flows mean that it's subject to the same kind of rules as stocks and others. So why hasn't it recovered? Why is it people suddenly have lost the attraction, don't seem to have the attraction to Bitcoin that they used to?
Well, that's the million-dollar question. I mean, it could be because institutional investors have pulled back a bit. I know we still create quite a lot of new ETFs, etc., and there are inflows into those. But cryptocurrencies in general just don't seem to have the same appeal as gold at the moment as a safe haven play. So because there is no underlying physical protection in a way available to cryptocurrencies, perhaps that's why investors are not so keen at the moment to go long on those. And also, a lot of people maybe got a bit scared, even institutional investors, when we had the sharp sell-off from, as I say, around $126,000 down to $80,000, because after all, that's quite a dip. We saw a lot of the other big ones, Cardano, Solana, etc. I mean, they came off about 45%. So that cooled a lot of investors' interest on the institutional side, because they can't deal with that sort of volatility.
No. But then they should have known about that before, because it's not as if Bitcoin doesn't have a history of being volatile.
Yes, but the view was perhaps that, yes, in the past it was volatile because it wasn't now what it is. A lot of institutional investors being in there, it wasn't a serious investment that the BlackRocks of the world could be invested in. Now it is the case, so it should become less volatile. So they probably expected, I don't know, maybe 20% down moves, but not 40. So that could have, worried some investors here as well.
Quite possibly. But then I present to you Oracle, which had that huge surge in the summer, and there was the talk of Ellison's wealth increasing by 40% in one day or whatever it was. And now look at it, we are down, we have halved from there.
Yep.
So it seems odd to criticize Bitcoin for its volatility when we have a stock market where some of the great names that are doing very, very well, Netflix as well being another example this week, can suffer such huge declines. But it's particularly notable, I think you've got Oracle here. Is this a case, again, of euphoria, going too far, too fast? When do we have Oracle's earnings aren't until much later on in the season, so we've got a while to wait, haven't we, before then? But there's another case in point of an uptrend that really, this is a weekly chart, of course, for Oracle. You can see here, and how far and overextended we were, and how far we've come down. So we've halved in price from those summer highs, haven't we?
And you just mentioned Netflix, Chris, with the results yesterday, which weren't actually that bad.
No.
Look at the share price. I mean, as you just mentioned, we had a very fast ascent back in April into the highs in July, but since then we've actually come off. So we went sideways and then back to where we traded in, well, basically April of last year when Trump worried the financial markets. So if you looked at this chart from a technical perspective, it's actually not looking that great. Yes, we might hold at this really good support area because we've also got the lows from January of last year and March. So that's likely to hold here as support. But the impetus has clearly been to the downside here, not to the upside.
I always think that someone said once, everyone's a chartist in a sell-off, I think is the sort of variant of the phrase, there are no atheists in foxholes. And suddenly, even the most fundamental of analysts starts looking at a chart when you have that kind of decline. And it's interesting how Netflix has done the opposite of what I said earlier, where markets tend to fall 3 times fast and they rise. This one rose, and it took 3 times longer to erase those gains. So it's notable how you just had this loss of enthusiasm for Netflix. But certainly, I think if someone came to me and said, and it's, what do you think about Netflix or these numbers? My answer would probably be, well, it's probably a safer idea to, not to blindly go against the trend, but it might be a safer idea to buy it now when the valuation is obviously much lower as well compared to where it was, than it was chasing it up here in June at, say, $133. It seems to be that, because again, as you noted, you've got some levels to trade against in terms of a stop, haven't you? The $80 level appears to be, if you like, the line in the sand here for Netflix.
Yes, so if you want to do it from a fundamental point of view, I would agree.
He says with much derision. But yeah, I think it's a very interesting one, that the way you've had these huge falls in companies that continue to do very, very well, and yet the sentiment just seems to be unable to recover, although maybe this week marks that, because you have seen, and this is a weekly chart, a tiny, tiny recovery in the short term. Again, one swallow doesn't a summer make, and all that kind of thing. What else are we covering this morning? We should look, not much on the FTSE 100 this morning in terms of real heavyweight news, but as you can see, these are our winners this morning across the board. IMI, St James's Place, tobacco doing well this morning. It doesn't have a feel of a rampant risk on morning. I suppose what's notable from the FTSE 100 so far today is the absence of on the leaderboard of those precious metal stocks and indeed the miners that have been doing so well over the last few days. So maybe some of the frenzy there is finally cooling, with the likes of Fresnillo and Endeavour Mining not at the top of the list. In terms of our fallers, don't forget it's ex-div day as well, so bear that in mind. Beasley continues to come off after its bid early in the week. Actually, notably, miners under pressure this morning. There you go. So that's where your mining stocks are. They're not lurking at the top of the index. They're lurking at the bottom of the index. So that's the particular one to watch. Greenland mining, is it? If it was really easy, they'd have mined it by now.
Of course they would have. Yes, and you know, the deal that Donald Trump is trying to get, is that for military bases or is that for mining?
Yeah,
that's the big question, and we don't know the answer to that question. But yes, I mean, if it was that easy to extract rare earths from Greenland, I'm sure the Greenlanders would have already done that.
Yeah, we opened up the concessions.
Yes.
Mining companies aren't slow to find new ones, are they, typically? No. Rio Tinto, briefly, this one cropped off my radar yesterday. There's your monthly chart for Rio Tinto, so bear that one in mind when we talk about it getting near to record highs, because the high from 2021 is about 67 £67 a share. We are now at 65. After we've gained 50% or so in about, what's that? Can't see, just over 8 months in Rio Tinto share price. A massive recovery there, but a number of other UK miners having similar charts here as well, but notably Rio Tinto. Not a stock you hear talked about at record highs very often, because it hasn't been in coming up on 6 years now, and yet suddenly this morning it's back in play. So there's a notable revival of. Here's your monthly trend. It's just you just have to sit through long periods of underperformance to go with that, don't you?
Yes, and I've just been asked here on a stock, Cameco Corp, what I think of that. And what do you think of this chart? I mean, what is your interpretation of that? This is the monthly chart.
That's a monthly chart as well. So where are we now? So that's sixfold in, well, a number of years, isn't it? But even on the daily chart. And that's just the beginning of the year.
Yes.
What does it do? What does it do, anybody?
I have no idea, but it's looking very bullish. So if you're long that...
uranium, there we go.
That's probably why.
So with the US talking about... I think there was a suggestion yesterday that the US government was asking states if they'd mind hosting nuclear waste sites in return for nuclear fuel production and power. So with Germany going back to it, Japan reopened its plant this week, or talking about reopening its biggest plant this week. So it seems to be the way these things are going. So there we are. What on the list we have today for events? Thankfully, no more Trump speeches in Davos. We are spared that. I'm sure you're as disappointed as I am by that. But if you look on, we have GDP, this is the final Q3 GDP reading in the US today, and also jobless claims. And then personal consumption expenditure index, so the price index. So this is, again, as we always say, the measure the Fed watches rather than CPI, but the market doesn't really care about it, does it, to be honest?
Not really, no.
No. So there's mixed reception there across markets for that. And then overnight, don't forget, you have Japanese CPI, but that is merely the warm-up to the overnight Bank of Japan decision, though that's expected to leave rates unchanged. So that's your calendar for the day in terms of earnings. We should get Intel after the bell tonight as well. So that's the other major one to keep an eye on. I think that's everything.
There's one more question here from our viewers, Alcoa, and again, I've got a monthly chart up here on my chart, and basically, what is it doing? Well, it's on track for its sixth consecutive month of gains, and you can see here that clearly, even on the daily chart, we are still looking very bullish. So the trend is your friend. What else can I say? For me, it's probably going to go towards the 7,000 mark here, provided we stay above those lows we made this week. And that's the case for a lot of short-term charts. If you look at the lows from this week, they could be your stop loss levels, basically, if you trade these stocks or indices from a short-term perspective. But the trend is your friend. Don't try and fight it. Go with the flow.
Wise words as ever. Good. Thank you, Maxwell.
Thank you, Chris.
Thank you very much for joining us, everybody. We will see you back here live on Monday.